let's talk about the geopolitics then. The US has sharply escalated its confrontation with Iran, launching fresh strikes on Iranian military targets just hours before reimposing its naval blockade around the Strait of Hormuz. Now, Washington says that the operation is aimed at protecting commercial shipping after accusing Tehran of attacking multiple merchant vessels. The move effectively ends last month's ceasefire, raising fresh concerns over oil supplies, global shipping, and stability in one of the world's most critical energy choke points. And moving on then, a bipartisan group of US senators has unveiled a revised Russian sanction bill that directly targets major buyers of Russian energy, including India and China. The legislation would allow tariffs of up to 100% on the 5 largest purchasers of Russian oil, while imposing sweeping sanctions on Russia's energy, financial and defense sectors. The revised proposal is less severe than the earlier 500% tariff plan and also gives the US president the authority to waive sanctions in the national interest. Listen in.
On gas purchasers, it makes an exception for the purchasers who are buying less than 15% of total Russian natural gas imports and are taking significant steps to reduce their purchases. So our European allies are not targeted here. Very important to understand that we have so narrowly crafted and tailored and targeted this bill to aim at the major Russian purchasers, the purchasers of Russian oil and gas. And we crafted them to make exceptions for our friends and for the aiders of Ukraine. Now is the time for this sweeping sanctions bill. It's been referred to as a tariffs bill, but actually it imposes full blocking sanctions on wide swaths of the Russian economy, including its energy industry, financial industry, defense industrial base, oligarchs, business people, and Vladimir Putin himself. It imposes tariffs that are targeted, narrowly limited to the 5 major purchasers, up to 100%, with waiver authority that is narrowly tailored and constricted. And those 5 major purchasers right now of oil are China, India, Slovakia, Hungary, Azerbaijan.
Moving on then, the US inflation cooled more than expected in June, strengthening expectations that price pressures are easing. Headline CPI fell 0.4% month-on-month against the expectations of 0.1% increase. The core inflation rose 2.6% on a year-on-year, below the 2.8% estimates. The core CPI was also unchanged on a monthly basis compared with the forecast of a 0.2% rise. Despite the softer inflation print, Federal Reserve Chair Kevin Warsh struck a cautious note, saying that the central bank has no tolerance for persistently high inflation, signaling the policymakers will continue to closely monitor price trends before making any decisions on the interest rates. And the Fed Chair Kevin Warsh testified before the House Financial Services Committee as a part of the congressionally mandated semi-annual monetary policy report. He said that he wants economy to be more broad-based and wants inflation increase to be limited. Let's listen in.
My colleagues and I recognize that high inflation has been an undue burden on American households and businesses. And while monthly price volatilities and variations are inevitable, especially in an unsettled world, underlying inflation over longer time horizons is determined largely by monetary policy. As the chairman said at the outset, inflation's a choice. The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to ensure price stability. This was the focus of our June meeting, at which we decided to hold the target range in the Fed funds rate at 3.5% to 3.75%. Now, naturally, our work at the Fed demands a proper reading on economic conditions. As you see in our report, economic activity grew at a solid pace, showing remarkable resilience in the face of recent developments.
And well, the biggest talking point on Wall Street this evening is the IBM, with its share plunging as much as 24% in the early trade after the tech giant reported weaker than expected earnings for the second quarter. Moreover, the company has issued a stark warning that the AI spending boom is beginning to squeeze global enterprise software budgets, raising fresh concerns about the sector's growth outlook. Darshita is joining us with the details.
Right. IBM shares plunged in trade after the company released its shareholders letter, where both revenue and the earnings missed the street expectations. So what is exactly which went wrong? So basically, IBM reported its Q2 revenue of around $17.2 billion, which was below the consensus estimates, while the adjusted EPS also came in lower than expected, which disappointed the investors. Now, the biggest drag came from the infrastructure business, where the revenue declined due to the weaker than expected demand from the Z17 mainframe cycle. Now, that weakness also impacted the company's transaction processing software business, although the broader software segment continued to grow. But it wasn't enough to offset the infrastructure slowdown. Meanwhile, the consulting business remained largely flat. And something which management also said was, according to IBM, the final weeks of June, many enterprise clients unexpectedly shifted their IT budgets. So instead of spending it on software and mainframe upgrades, customers accelerated purchases of servers, storages, and memory hardware, anticipating possible price increase amid the supply constraint. And management has also admitted to execution issues, where saying several large deals failed to close within the quarter as planned before, hurting the overall revenue and the growth. So while the IBM's long-term AI and software strategy remains intact, this quarter exposed to how shifting enterprises' spending priorities and the delayed deal closures can quickly impact the financial performance, and that is what has actually happened in IBM, and hence the shares plunged.
Moving on, then the MEA has confirmed that the death of one of the India's seafarer in a strike by Iran. India has strongly condemned the attacks on 2 merchant vessels in Strait of Hormuz, which has also injured 10 others. The deputy chief of mission of the embassy of Iran was summoned by the Ministry of External Affairs, and a strong protest against these attacks was lodged with him. Srinjoy gets more details on this.
The Strait of Hormuz is not a particularly safe place, not for sailors, not for ships, not for tankers, not for container ships. And they have been attacked in recent times, and many of the sailors happen to be Indian. On one ship, an Indian sailor is still missing, presumed to be dead. 11 were rescued by the Omanis. But the important point is the Indian government is very cross. The Indian government is making it very clear that these attacks are unwarranted, which is why the deputy chief of mission of Iran was called in and basically informed about these attacks and told that the Indian government is unhappy with this, very cross, that ships carrying Indian sailors have been attacked and there have been deaths, and there could well be more deaths in the future.